Good morning, good morning. Hey, Badir, how are you doing? Good, good, good. Hey, Moran, how are you? Happy month end. Hey, Jerry, how you doing? Check your DMs, Jerry. Hey, Marcus, how you doing? Pollux, what's up? How's our friendly neighborhood crypto market maker? My girlfriend keeps asking, when are you guys going to rail this crypto? Like, what's the deal? Pitter patter, get at it, man. You got to break 100,000 again. What's going on? She's getting impatient. Good stuff, Jerry. No kidding, eh? Yeah, she's not really a fan of the it's building a new cost basis idea. She's like, well, pitter patter, let's get at her. Tell your market maker buddies to move it. There's nothing worse than an impatient long. Hey, Nate, how you doing? Oh, no kidding, eh? Okay. Well, welcome everyone. Trading Syndicate. I'm JJ, known as vwaptrader1 on X. Welcome to the YouTube stream. Welcome to all the folks in the room. Looks like we found the bid in the overnight low. Huh. I just wanted you guys to see. I left the. I can go and get rid of the evening sessions, but I wanted you to see we have basically. I used these evening profiles to go look at a cost basis, and we had a 69.23 to 63 cost basis, and the rate decision was no big deal. They're not changing anything. So we have this cost basis. If you double it, 70.42 and a quarter was the top of it, and we went to 43 here 2 days ago. So we came back in. So we're looking for the target should be 69.63. Now, failure to get to that target means rotation right back up, which is what it's doing right now. We are inside yesterday's range, and we're above yesterday's cost basis. Overnight inventory initially, see what happened was the market went and high closed, right? It sold off at the end of the day, and then it went up and it high closed. So in Globex, or the night session, right? Generally after a high close, usual thing is to correct inventory lower, and then the shorts who got trapped down here under 7,000, they grabbed all the cheap stuff, and now the market is back above the close. So we've corrected overnight inventory. It's going to be interesting when London opens. Right, we're in a little distribution here between the close and the overnight high. Yesterday's high is up here in that 70.30 range. And there's our swing high. That's the all-time high in the daytime. That's the RTH all-time high. Okay, so let's see what happens. It's month-end order flow, which means, you know, the flow of customers is going to be sort of unpredictable today because it's the last trading. It's month end. It's tomorrow's the last trading day of the month. Today is what we call market maker. I mean, tomorrow's market maker month end. Today is when positions get marked to market. So we're watching to see what happens. Of course, everything is a risk situation. So don't do anything stupid. Don't blow up your account on month end. Okay. We are in this distribution balance here, 2 times cost basis. There's the cost basis here, right? If you don't know what cost basis is, if you buy one share of stock at $1 and another share at 2, your cost basis is $1.50. That's how much you paid for your stock, right? This is how much the wholesalers, this is where they're long, and this is where they're distributing. When they put it on sale, they'll bring it back down to where they paid for it, right? Markets are very simple. These charts are called a TPO or a market profile chart. And what they do is they allow us to see the cost basis of the inventory. This is where the inventory is priced, right? It's a market, so there's an inventory of, in this case, ES contracts. And you sell those contracts for profit. When you run out of buyers, you put them on sale. And when you put them on sale, in an uptrend, when a market's in an uptrend, right, when you put it on sale, it attracts, number one, short covering and buying. Okay? Hey, AO, what's going on? I have no idea what J Money said. I never pay attention to the Fed stuff. It's like, you guys, I'll let the macro, I like to call them the macronutrient crowd. I'll let them figure all that out. I just look at the chart, right? Do you think that it could be a round number effect also, that the price has broken 7,000? Well, yeah, definitely, right? A lot of people were probably shorting 7,000 and, are trapped. You could see the march up here from 69.63. Look, short position, short position, short position, short position. So we came down here for what, 20 minutes? Found the bid. We came down here for a couple of hours. Couldn't take out yesterday's low. Found the bid once again right here where that short position is. Today is month end, so the people who are short under these levels, they have to trade their way out of this, or they have to, they have to start covering. When they start covering, that's why the market keeps moving higher, because all the inventory now for yesterday and today is underneath the close, right? So now we're in distribution for profit. Very simple how trading works. People love to overcomplicate it, but you don't need to, right? These are what we call a market profile chart. Forgive all the squiggly lines, right? They show you where the stops are. The bottom of basically these are just a half-hour candle chart, right? And the bottom of every half-hour candle are where the lower stops are. The top are where the upper stops are. So for example, here, if we take that stop, it'll create buying and we'll be going for 70.30. If we take out yesterday's high, right, that will trigger a lot of stops because a lot of people will have their swing stop here if they're short. If we trigger that, we'll get a move higher, right? At this time, Globex, hard to know what the heck's going to happen, right? It's really hard to see what's going to happen. The overnight point of control, where the heck is the overnight point of control? Oh, it's all the way down here. So the overnight point of control is all the way down at 69.98. What does that mean? That means this is where 70% of the overnight inventory is priced. As you can see, the wholesalers are having a beautiful night because they're selling that 69.88 inventory at 70.27, right? George FX, are you please join us in the live ES room. So yeah, nice short covering, right? That J low couldn't take the I low. It opened, came down, couldn't take the bottom of the last half hour bar, straight back up. Oh, hey, George. Welcome. Welcome, welcome. Yeah, you could use the Discord room if you feel like it, whatever you feel like. So, your question while we're waiting for this thing, because it's just pure distribution. Your question is whether to use a footprint chart or a candle chart. I personally don't like footprint charts because what happens is people lose situational awareness in a footprint chart. I like a candle chart because it filters out a lot of noise. See, like right now, right, if you look at these candles, the problem is people don't know how to read a candle chart properly. They use technical analysis and all kinds of indicators and everything, right? Which is fine, but it's a massive waste of time. All you got to do on a 1 minute candle chart is watch the offer, which is this red line. The red line sets the price. If buyers come in, the red line will move up over 70.28 and start printing half, three-quarter, 29. If we run out of buyers here and the sellers start competing, that red line will move lower and start marking price down. And the top of the candles will start getting lower. Right? So it's very simple. Right? The problem is that it's so simple that people have trouble with it. Right? People have trouble with simplicity because they've been conditioned that this is very complicated stuff. But unfortunately, markets have been around for thousands of years, and we didn't get a lot of chart-based trading until after Windows 95. So only since 1995 and afterwards have we had a lot of electronic chart trading, because you couldn't trade off of charts with a 386 computer running Windows 3.1, right? Didn't have it, didn't have the RAM, all of that stuff, right? So how did people trade before all this? Footprints, nose prints, right? Bookworm, right? You know, Mindhead, all that crap that these people have, right? They watch the offer. When the offer is moving up, you don't short. When the offer is moving down, you short. Put your stop above. For example, if this was a look above and fail of 70.28 half, right? You wait till the market comes underneath and starts offering. Wait for the back end of the move. You short and you use that as your stop, because that's where your sellers are competing. If your sellers continue to compete, they will lower prices because that's how business works, right? Right? If you're selling and I'm selling and you sell a tick lower than me, I'm going to lower my price to get rid of my inventory because my cost basis is here, right? It's very simple, right? If I'm short and my stop is here at the top of this candle, just for example, this is not an A plus setup. So if I'm shorting under 28 and a quarter and the offer starts moving higher, that means I've lost my seller. When you lose your seller, you're in trouble if you're a short seller, because you're not going to push the market down. You need the sellers to compete and lower price. That's why you don't want to short the front end of the move. You got to short the back end of the move, right? Front end of the move, back end of the move. The back end of the move is when you see a seller. When you see sellers and you see them competing, right? And that means you got to wait for the sellers to show themselves. Right now, they're not. You can see the offer is moving above 28 and a half. There's no reason to short it yet. Wait till it does one of these, right? Or it does one of these over 30, because 30 is a huge level for us. Right? Very simple. Right? We want our analysis to be simple because execution is difficult, right? And when do I decide to abandon an old cost basis? If we have like a 60-point move from here, and then we go sideways, I'll redo the cost basis. Because it's very simple. My cost basis is here, 69.92 to 99. 2 times profit zone is up to 13. 4 times profit is 42. So what that does is it keeps me aligned in the business of the day, right? So I know, why would I be buying it? If it's at 70.40, why would I buy it at 4 times what we paid for it, right? You'd be looking for a look above and fail short of 42 and 3/4, right? That's your A plus setup right here, right? Hey, AZS. So, or if we came and we looked below 70.13 and came back up, you'd go long, put your stop here, and then sell into these levels, right? So this, I don't trade. I don't trade this distribution. When London opens in, 12 minutes? Right? When London opens in 12 minutes, we're obviously going to have single prints. I want you to zone in on this area here, right? 70.24, that's where, if we backfill, you'll be looking for bids here because everyone who's short under 24, they'll have their buy orders here. And we'll come back down and you should find a bid here. So if London opens and London can't take out the K high and you start moving lower, you short, you put your stop at 70.30 and then you'll put your bids down here. See what I mean? Everything we do is based on market structure. And what is market structure? It's the structure of the transactions, right? So we're not looking at a DOM, right? All we have to do is follow the chart. The chart will tell us where it is, right? It's very simple because it's based on the business. And welcome, George. And we do have a lot of Greeks in our room. And I used to trade for a lot of Greeks, right? I had a crew out of Piraeus in New York City. I don't know if you guys remember dry ships, DRYS, right? Back in the day. Yeah, I worked in a nightclub owned by Greeks. I had a lot of Greek clients. I had a Greek girlfriend. So, yeah, very familiar with the culture. uh, did you? Well, thank you, Charles. Thank you. We appreciate that. It was a good deal. Yeah, we had a lot of fun on those deals. It's funny, but my Greek clients, they lived in New York, but they didn't live in like penthouses or anything. They lived in Flushing, in like normal, regular houses. But I'd be like wiring $30 million a month to Piraeus. Yeah, you'd meet these guys, and you know, they actually had restaurants too, and they actually worked in the restaurants, but they owned the entire building in New York City. They had so much money, but they never showed it. Great clients too, never caused trouble. They were just amazing. I don't use standard deviations. VWAP is an exit. So if we were short and the market came down, I'd be looking to cover before VWAP. It's a place where I exit trades. If we're long and we come up to VWAP, I know there's going to be sellers because VWAP is an institutional execution standard. So I know that there'll be business conducting at VWAP, right? Hey, Dave, how you doing? Good stuff, brother. So right now we're in distribution, just chilling out. The market makers are selling their goods up here, right? That they bought quite a bit cheaper. See? These little red candles that take you down here, they find buying, right? So you know the bid was here and it moved up here, right? It was here and then the bid started following the offer as the sellers started raising price. I use one VWAP, George. Now I know anchored VWAP is a beautiful thing, and we do love Brian Shannon, but I'm a simple trader, right? I'm an old man, right? So I anchor my VWAP at the 6 p.m. New York Open for Globex. I use 23-hour VWAP. Now, there's nothing wrong with anchoring VWAP at different places. I just want to know where all the cool kids are, and they're generally at the standard VWAP. That's where most institutions do their business, right? The other thing is I have a monitor addiction problem when I use anchored VWAP. I start anchoring it all over the place, and I start buying more monitors. And then next thing you know, I look like the drummer from Iron Maiden, where you can't see me. I'm surrounded by monitors. Not a good thing. So that's my only problem with anchored VWAP is it like I have a monitor addiction, and if I started anchoring, I'd have like 25 monitors, right? So I always joke around and I say Brian Shannon has a deal with Best Buy, right? So everybody reads his book and they're like, I need more monitors, right? Anchored VWAP is addictive. It's like Pringles. You just can't eat one, you know? So I had I have a technology addiction. I have a watch addiction. I have a motorcycle and car addiction. All of these things I have to manage in my old age, right? What's up, AZS? How you doing? Good to see you. Oh, that's good. You took a time out. Good for you, man. Good for you. I took a time out too. I had the flu for 2 weeks. Not really the timeout I wanted, but yeah, those Apple monitors, man. You gotta like sell a kidney to buy one of those things. No thanks. I'm too cheap. I'm too cheap for Apple products. Alrighty, what's going on here? How's the coin of bitterness doing this morning? 88,278. Okay. Nothing going on there. We're waiting for London to open, ladies and gentlemen. That's why I just don't see a trade here. No, I have five. I have five. I have five because my girlfriend goes and buys like these equities that I have to watch for her, and then crypto. You got a curved monitor from Amazon for £100? Oh, don't tell me that, Sean. And why'd you have to tell me that? Now I'm going to be on Amazon after the thing. That's not cool, man. I've always wanted to try a curved monitor. Yeah, level two is an order book, George, and what I've done my whole life is I've manipulated order books. Order books are expressions of interest, so you just use the DOM for execution. Are you on Albert Dock later? Yeah, okay. Yeah, no, I've got a watch addiction, a car addiction, a motorcycle addiction, and a technology addiction. Is that enough? Right? Which I've all managed to cap. Like I don't have any of that stuff now. Right? I've managed to do that. Okay, remember I said if we start moving lower, right? You could see that the the sellers were here, here, here. So if you're short, put some bids. See that level is 24. I would go 24 and a half, 25, right? And see if you can get hit if you are short. That's we have to be intelligent when we're shorting this market. So what's that level? 24 half? Yeah. I'd go 24 and three quarter and see if you can get hit because the 25 quarter bids are holding it up right now. You see the bottom of this candle. This is so cool, right? When markets are really slow, you can kind of tell where they're going to stop. See this level right here? The bottom of that candle was where the bid was, and we came right back down to that bid. It's fascinating. I wouldn't go long off of it, but if I was short, I know I would have to cover some here, right? Yeah, I still need my 73 Ford Falcon, Dave. I know, Phil. That's why I don't have any of that stuff anymore. But see, these guys are trying to tempt me. So when you're short, it's always good to know where you should be covering. And what you do when you're shorting, George, is say you'd shorted under 28, right? Say you went and you shorted 27, 27 and a half. You put your stop here at the above these candles, right? 28 your warning level, right? So as soon as you're short, go and put your bids in. So if the market goes and hits those bids and you get executed, you can stay short. Executed, you can stay short. But say you had a bid in here at 25 and the market got down there and you didn't get executed, right? Then you'd know that you have to move your bid up and pay higher. So you use your orders to tell you whether the trade is working. That is the most practical way to trade. Yeah, big George Carlin fan here too. Okay, here is our short position, right? Remember I told you it's right here. Boom. So London Open went down a couple of ticks, right? So the shorts are trapped between 24 and 25 and three quarter. Can I show 20? Because, yes, because it's the top of H. You see, TradeMaker, when we took the top of that candle, anyone who was shorting would have used that as a stop. You see how we come back in here and you'll see responsive buying as we get into this area. See how the offer is lifting? If you go and use chart replay, watch this price action. These are unfilled bids. So unless the sellers start to compete, those bids won't get filled, right? Let's see, they should get filled because it's a pretty rotational market. So if you were short the top here, put some buy orders in at 25. You always want if you know they're going to be buyers here, you want to step ahead of them, right? Buy a little bit ahead. There you go. Hey, we filled the singles. Nice. That's good. It's nice to see a decent sell order, right? If we accept under 24, 21 is your next target. Yeah, so say George, if you were short here, right? You're short here, you put some buy orders, you put in your buy orders, right? That's how you do business because if the market takes that hits that buy order and you're short, great. That one great. That one great. That one great. What if you have a buy order here that does not get executed? Then you can just go and cover your trade and make money instead of waiting for it to come all the way back into, to where your cost basis of your short is, right? There's 21. Ah, that's a nice trade. I should have taken that. Oh. Now, if we break 20, right, if the selling, because we've trapped longs here, they're all bailing out. So the wholesalers will sell it down to 17 because that's where the cost basis is. That's that last cost basis is right here. So markets rotate up to create demand, and then they rotate down to fill in that demand with supply. I always scale out of positions. The reason is because then I know I let my orders tell me whether or not the market's doing what I think it is. Nice trade, Phil. Nice trade, right? Because you're going to take thousands and thousands of trades over your trading career. So for me, I would rather take profits. Like say I had shorted 8 contracts up here, right? I'd cover 2, 2, 4 kind of thing, right? And see, we're right back into cost basis, right? If we have a lot of sell orders, we will take out this low, right? Because remember, the close is here. Now, London loves to go and get some cheap inventory, right? So if we're going long, if you're looking for a long, right, I would prefer, my best long would be this. If we came down here, looked under 13, and came back up. But because we've got this chunk of volume here, we might slow down in this area. Let's watch and see. Right? The sellers, if you are thinking of long, there's going to be a seller here at 22. Right? I would let them clean this area out, wait till it gets above 22 and go 22 to 25. Right? That's a trade that would make sense because then the inventory would be underneath us. Right? Right now, they're still cleaning the hotel room. Right? So we got to clean out these characters who are trapped long. They're not all going to sell at the same time. So let's see if it holds this area here, if that makes sense. Because that's your cost basis before the move. Cost basis is just time and volume traded. Thanks, Sean. Now I know you're a bad influence. Oh, goodness. Nice trade, Phil. Beautiful. See? Yes, if you don't have market profile, you can use volume profile. Let's show you here. If we draw a volume profile, let's say just from here to here, see, you can see this is the cost basis. This is the distribution cost basis, and then we came right back to where we paid for it. Cool. Cool, cool, cool. I'm a little slow, as my mother would say, I'm a little slow on the uptake. It was her gentle way of saying you're stupid. Um, I was up till like 1 in the morning. I don't know why I was up so late. I couldn't sleep. See, I still see. So now we have a seller here, right? So before I went long, if I decide to go long here, right, how I'd manage that is the bottom of these candles are my exit, right? So Oh, sure. Hey, Marios. This is called market profile, otherwise known as a TPO chart. All this is, uh, Mario, is this is a half-hour candle chart. That's all it is. It's a fancy half-hour candle chart where they give a letter to each candle. So you can say, okay, this is L period, this is J period, right? And what it does is it allows you to show you where the cost basis is, and you can see we're in distribution above the cost basis, right? It's just a very clear way of looking. What I call this. This is like, say we're exploring a city. This is a map of the city right here, right? And then if we want to do business in this neighborhood, we go into here, and then that's where we zoom in using the 1 minute candle, right? So say you're long at 22, 22 and change, right? Make sure you put some sell orders out. I'd put a lookout offer at 23 and 3/4 and see if it gets taken, right? So if you buy the 22s, right? See if you can sell 23 and 3/4, because if you can't, there's a seller there. See? Oh, on this chart, the blue is the cost basis, the green is 2 times profit, and the purple is 4 times profit. If you're just joining us, thank you for joining us. And the other thing is, I've got about 400 videos on this YouTube channel that explain this stuff, right? And then, of course, we have our trading room, right? Which Steve-O is having a pretty cheap sale right now. I think it's only $19, where you get the room and AI, right? Give it a shot for a month. It's cheaper than going to Starbucks, right? And you get our AI trading coach for free when you join the room. And I promise you, you'll learn more in a month with me than you will in 10 years anywhere else. That's a guarantee. Like knowledge that'll actually help you make money, not just fancy ideas and indicators and all that stuff. Very, very simple, very simple, no nonsense. This is where you take your trade. This is when you trade. This is when you don't trade. Those kinds of things, right? So had I been long at 22 and I didn't get filled at 23 and 3/4, I would have been out, right? Not an A plus setup, right? So let's see if they build inventory here and then do another push up, or if we come back down to 17. What you do is you watch the offer. The red line is the offer. The green line is the bid. When the offer starts moving higher, the sellers are trying to tell you, psst, we see some buyers. See? So here I bought 22 half, and I'm selling them at 24 1/4. Will they take me at 24 1/2? Right? I'm offered at half, 3/4. I'm long 22 half, and I'm out. I'm flat. Right? So once I saw this candle, right? When I saw this candle come down and not take this candle, I saw the bid moving higher. That's why I bought 22 half and I had my stop here. And then I just put my sell orders out. I knew there's going to be selling up here, so you just sell into strength, right? And that's how you trade tactically. See, London Open corrected inventory, shook out some cheap paper, and then boom. Would you mind explaining when they pour concrete at a level so they enable a move higher? So do you mean that they spend time at a level and then move it higher? Phil, that spending time at a level attracts buyers. That's price stability. And the beautiful thing about this big green candle is the market went down here, the smart money shorts covered, the wholesale longs accumulated, we started to buy a little bit, and then the dumb shorts shorted here and here. So when the dumb shorts realize that they're screwed, they go to cover, and all of the inventory is under 23 half, we raise price. Boom, they're trapped. It's like clockwork. And the beautiful thing is, as P.T. Barnum says, there's a sucker born every minute. So there's a lot of dumb traders in the market, right? And it's not their fault because they don't understand structure and they don't understand how the business works. They're trading off indicators and patterns, but they don't understand what creates the pattern. They don't understand the business that creates the pattern. So how in God's name can you do business if you don't understand the underlying business, right? And then they have people who go around saying, "Oh, it's random." Yeah, you put $1 billion on the table and see how random it is, my friend. Right? Yeah, go ask a billionaire. Yeah, can you invest $100 million in this deal? It's random. Be like, get out of here. Right? Yeah, random. There's nothing random when it comes to money. So that's what the big green candle is that's a short covering, right? People who followed price and shorted under 23 are trapped. So 23 will be support when we come back down. So if it does another move up and come back down and you're short, that's where you'd be putting your bids. Very simple. Simple, practical, common sense, a little bit of wisdom. Yeah, and inventory was short, right, trade maker? There you go. Overnight inventory was short. Do I have a minimum? No, it's what the market gives me, right? George, say you're selling fish, right? Say you're a fishmonger, right? If if there's not a lot of customers, you got a lower price, right, brother? Because it's a market, right? You don't want to be the malacca stuck with product that you can't move. Know what I mean? Right? So I like 2 to 3 points, but if they give me a point and a half, I'll take it and smile because there's always the next trade. What I like to do with ES is I like to make 2 to 3 points on 5 to 8 contracts, right? And your risk is very defined, right? My limit orders are based on the business. So if I was long here, right? I knew that there was going to be a seller here. Hey, Neela, well done. Well done. Right? So I was long 22 and a half. Okay? I knew there was going to be a seller at 26. So I put my orders before the seller. It's called front running. Right? Rothschild said, the reason I make so much money is I never try and buy the bottom or the top. There's so much meat on the bone. So let's say, for example, right? If you make 2.5 points on that trade, right? It's not a lot, right? But on one ES contract, 2.5 points is $125. If you do 8 contracts, that's $1,000 trade. If you do that trade once a day, it's 20 grand a month. And you're not sweating. And you're not holding trades, right? You're in, you're out. Go have some moussaka. Right? Sorry, I'm fasting today, so when you said you were from Greece, I automatically started thinking about moussaka. So I'm really hungry. Well done, Neela. Great stuff. Beautiful trade. Yeah, exactly, Marios. We got a poor high, so we have some selling competition at that overnight high, which is expected, right? I mean, if I was long 23, 25, I'd be selling them with both hands here at 28. I don't mind trading NQ, but how's your blood pressure? What I don't like about NQ is it's a thin market, right? I don't like thin markets because thin markets mean that um, where is the trading DOM? Open trading DOM for chart. Right? Where is it here? Right? Look at the NQ DOM. It's ones and twos. If somebody drops an order for 50 contracts, it the, there's no cushion. Look how thin the order book is. I know it's 3 o'clock in the morning, but look how thin that order book is. This thing will move, and look how it's moving. It's jumping around like one of those little jumping beans, right? It's okay if you have a large account, right? Be my guest, right? If you have a large account and you're really skilled, right? That's fine, right? We have traders who trade it in our room who make money, right? Compare that with the ES. It's 30 aside. There's 200 here. Okay, now a lot of these could be false orders, but at least it's 10 times what it is in the NQ, right? So you have a little bit of cushion on 3 or 4 contracts, right? Good stuff. Yeah, good stuff. Right? Every time a retail trader makes money, a market maker gets his wings. I'm very happy to hear that. Try the ES, George. It's a nice market. I have to get it edited, GT40. I've got a couple of hundred pages written, and I have to get it edited. So I have to find somebody, because I don't know how to write. I just sit down and I start writing about all my old experiences. The nice thing about the ES is you can size it 5 to 20 contracts, right? You have a cost basis within a cost basis. You're always going to have that, right? That's 17 to 21, exactly, right? And they're selling it to 27 to 29 because wholesalers, right, don't need to make a lot of money because they're trading hundreds and thousands of contracts. So if you run 1,000 contracts through one tick, it's 12 and a half grand. Right? That's why I like the ES. You can size up a little bit in Globex. Not crazy, right? Or even if you have 100 contracts, you split up your orders, right? So you don't put all 100 contracts out at one price. That's why you scale it so the market can take it, right? Pretend the market is a snake and your sell orders are like food for the snake. You want it to be able to digest, right? You just throw those out, right? You're always selling them. You're selling them, you're selling them, you're selling them, you're selling them. As soon as you're long, you're a seller. As soon as you're short, you're a buyer, right? That's a double top, another poor high. So we have selling competition at 70, 29, and is that 29 and a quarter, 29 and a half? So the point of control should move up. It's 1,551 contracts down here. So let's see if we can print 1,500 and 1,600 contracts here. What's the best time to trade? I like Globex, right? If I'm not sure, are you in Greece or are you in Europe? Um, I'm in the UK right now, and I love the hours here because I can get up, I can make some money, and then do my teaching and consult with companies and stuff like that. Um, and do whatever I need to do. I like trading RTH too, but the thing is, I'm up at 4 or 5 o'clock every morning. So by 2, 3 in the afternoon, my reflexes are not as sharp. Um, I miss things. So I like to make my money before RTH. I'll trade RTH, right? but it has to be an obvious trade, and I have to be really dialed in because it's a faster market. So for example, if you were shorting this, right, say you're shorting 27 and a half, 28, right, you could see because the offers are moving lower, right, and I'd put some bids down here. I'd put a sacrifice bid here. Right? And now if the market offers above 28 and a quarter, then you know you're in trouble. Right? As this candle develops, right, you have sellers here and here. If you lose those sellers, you're hooped. So say you're short 27 and 3/4. I covered one at 26 and a half. Covered the next one at 26 and a half. Oh, you dirty rotten. 3/4 is what I got the next one at. I'm 26 and a half bid for my last contract. They're not giving me it. I'll just fill it. I'll just flatten. Right? And so I traded 26 and what was it, 3/4, 27 and a half. My stop is here. And then I put my buy orders here. As the market goes down, boom, 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 it hits me. Easy. Easy peasy. Right? This is the back end of the move. Right? This is the front end of the move. This is the back end of the move where the sellers start to compete and lower price. The top of the candle are where the sellers initiate. So they're here, then they move here, then they move here, then they move here. That is your sign to short. Trend line people, my trend line crowd, right? That's why you guys have that trend line. The trend line means the offer is moving down. This trend line means that the bid is moving higher. Right? If you want to understand why trend lines are there, there's a mechanical business reason for that. Right? Had I had a few more contracts, I would have put a 25 and a 24 and a half bid in and see if I get hit. Right? You make a couple of points here, you make a couple of points there on a couple of contracts. The main thing is you pay yourself. The blue cost basis, what I usually do is I wake up at 4 in the morning, 5 in the morning, and I draw the cost basis. What I did was I used this area here. Right? This is the cost basis, and I put it in the room. You could see why I use that cost basis. Yeah, it's, I like to keep the analysis really short and sweet. Right? All I care about is where the sellers are, where's the bid. Right? When the sellers engage, I will sell alongside. You guys familiar with that term, sell alongside? Right? So, George, if you were sitting on the trade desk next to me and your client called up and said, hey, George, knock out 500,000 shares of this stock, right? Get it out of my account. Right? I'd hear that and I'd look at you and I'd go, hey, can I sell alongside? Which means, can I go sell 10,000 shares? And then you're going to sell 500,000 shares and knock the price down. Right? So say the stock is $8, right? And I short 10,000 shares, or I get 795. And then you go and knock the stock down using that big sell order, right? You knock it down to $7, right? I make 95 cents on 10,000 shares. I'm buying dinner and drinks tonight. That's what selling alongside is. So as retail traders, we're doing the same thing. When we see the candles, right? When we see the high of the candles moving lower, right? We ask the large traders, hey, can we sell alongside? So as soon as they stop selling, we got to cover our short. See what I mean? So as the offer moves lower, we sell with the seller. That's why people get into trouble, because they're always shorting this part of the move instead of this. because they want to try and get the top. But that's a fool's game, right? The intelligent shorter identifies that sellers are competing and putting price on sale. What you guys call one-time framing, exactly. One-time framing up means the bid is following the offer because the sellers have seen buyers and they're raising price. One-time framing down means the top of the candle are getting lower and lower because the offer is moving lower because sellers are putting the crap on sale to get rid of their inventory, right? So if you were long, George, if you were long 500 contracts here and you sold half of them on the way up, you'd sell the other half on the way down, and you could, doesn't matter whether you sell it at 27 or at 25 because you paid under 23 for it. It's all about inventory and cost basis, right? And then you look to see where the sellers stop selling, and that's where you cover. Look how the market came right to the top of this cost basis. To the tick, stopped, and the offer moved up. See? It's all about rotation, my friend. You're asking good questions. Keep coming to these morning sessions. Right? And once that offer starts moving up, you know there's going to be a seller here, right? If it moves up and prints, that means the sellers have seen buyers. But if that offer comes back down under the white line, there's selling competition. It's so easy. You're looking for shorts when it's at the higher cost basis, right? When they run out of buyers, right? So what you like to do is, the best trades, George, are the look below and fails. So when the market goes on sale, goes from one cost basis into another and pops back up. So very simple. Purple to green, back into purple. You go long, you put your stop here, and you ride it up that way. Hey Mario, it works for everything. It works for ES, it works for stocks, it works for FX, it works for any market that has institutional players in it, which is every market. See, because the thing is, markets are all the same. All they are cost basis and inventory. CAs, yes. Oh, we're done. Ah, sorry, I went on a little too long. So we're going to try and take that 69.98 inventory and we're trying to sell it up here. But if we run out of buyers, we're going to have to put it on sale underneath 24, 23, all the way back down to 19. Thank you, everyone. Come visit us at the Trading Syndicate. We're having that big sale. We will see the rest of you at 9 o'clock. And if anyone's interested in one-on-one mentoring, please reach out to me. I'm vwaptrader1 at gmail.com, vwaptrader1 on X, and in the room. Yeah, Jerry, just reach out when you're around, and we'll maybe 10 o'clock, we'll have a quick call. Good stuff, everyone. Thank you so much. Have a wonderful trading day. Don't take candy from strange market makers, and we'll see you at 9 a.m. Eastern Time for our next session. Appreciate you guys. Thanks for being with us. Bye for now.